Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Joe Cucchaira, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Cucchaira.
Welcome in. Good afternoon. Joe Cucchaira with Real Estate Radio Live. Thank you for spending some time with us today. Just a reminder, you could listen to us a couple different ways. One is on the radio, KDOW 1220 AM. You could also listen to us live online if you go to kdow.biz. That's kdow.biz. Click on the big button that says Listen Live, and as long as it's between 3 and 4 Pacific Daylight Time, you'll be able to hear the show live. Or what we'd also love you to do is download the app and then get the podcast. That way you can listen to the show anytime, anywhere. We realize that not everybody has the luxury to listen between 3 and 4. That's why we have technology, and so you could get an app, reradiolive.com. You can go to get the app, download the podcast. Listen to us anywhere that you'd like, and we'd love to keep growing that. We're getting several hundred a day, and that's the way to do it. Live show, we love your questions and comments, and I'll introduce my guest in a couple of minutes, and he usually gets all kinds of activity going on the phone lines and emails, so we'll see if we can do that again. 1-800-516-1220 is the toll-free number if you have a call or a question. Also, we have a text line if you'd like to text questions in. That is 408-838-9060. All right, let me introduce my guest, Mr. Ron Howard. He's the managing principal for Siena Wealth Management, Inc. Ron has been with us on and off for the last couple of years, but we've missed him the last 7 or 8 months. Welcome back, Ron. How are you?
Finally made it. Geez, sketches have been crazy, but doing great. Thanks, Joe.
Yeah, it's good to have Ron back on again, managing principal at Siena Wealth Management. We're going to talk today. The topic is a good one. Are you ready or prepared financially for retirement? And Ron really does a lot of research, has a tremendous amount of information, and really for you to help with your wealth building. So there's 2 things we're going to be giving away during the show for those that are interested. If you want to call in, there's a book that Ron wrote a foreword in, and it's called The Wealth Solution, Bringing Structure to Your Financial Life. So it's a great book he wrote the foreword to. He's giving those away free when he's on the show. He's always good enough to do that for you. So if you'd like a copy of this book, give us a call, 1-800-516-1220, or you could text 408-838-9060. Also today, we have a research document, which is really, really done well. Working Together is the title, but it's Design, Build, and Protect. So again, great research on how to design, build, and protect and plan for the future. And so there's really 2 things here that Ron is kind enough to give away during the show, and help those along with the process of wealth management. So, again, 1-800-516-1220 if you want to call about either one of these giveaways, or text 408-838-9060. Before we dive in, Ron, if you could just give the listeners kind of an overview or background for you and then your current roles and responsibilities as it relates to Siena.
Been in the industry over 30 years. Love the investment arena. It's just been a great experience. The biggest thrill, though, is really helping clients start at an early age, start preparing for retirement, and then seeing people retire comfortably, being able to reach their goals, objectives, spend time with their family, travel. We met with a client yesterday, and she goes, I just got back from doing the river cruise in Europe, and she says, life is good. Is my money okay? I said, yeah, your money is just fine. Oh, good. And it just moves on.
That's great, though.
It's been a great experience.
But that is great, isn't it? I imagine to work with people over the years and build that strategy and those goals so they can enjoy the second part of their life, right, for the most part. That's wonderful.
In fact, we have clients now that have been retired more years than they worked.
Wow.
So I have a couple of airline pilots that, retired at 60 years of age.
Yeah.
And now they're 85, and they've spent more years in retirement than they have working career. So that's great to see as well.
Yeah, no, it really is. Well, let's dive into the topics. Again, if you have any questions for Ron, give us a call, 1-800-516-1220. And we have the giveaways today, too, that, believe me, whether you're just starting or you're in between or getting close, it doesn't matter. These are great reads and material for everybody. So, do you have a plan? I guess that's the obvious one. Is that where you'd start?
That's right.
I know it sounds really simple, but it is simple. But it's amazing how many people don't just plan. Start, right?
Most people have no plan.
Right.
They have no plan. Oh, I got Social Security that I'm putting into. I'll rely on Social Security. Or I may have a little 401k that I'm contributing a little bit of money to. But most of them don't have a plan. And if you don't have a plan, you'll end up planning to fail. Yeah. So if you fail to plan, as the saying says, you'll fail. Yeah. So you've got to really have a plan. And whether that's just a plan you put down on a piece of paper, you do it with your relative or friend or brother-in-law, a financial advisor, but have a plan. Because part of that plan is going to say, okay, how much money do you want to have when you retire? Yeah. Now, you may not know the exact year you're going to retire, at what age, but get a close proximity and then start saving for that. Yeah. And most people got to start saving, 15, 20% of their income to be able to reach their goal, and most of us are 3 to 4%.
The good news is, if you're disciplined enough to start young, I mean that is really the key, right? I mean, if you're smart enough, disciplined, whatever you want to call it, if you start in your early 20s, then boy, I'll tell you that could really pay dividends. But as you get older, if you have a later start, like most people, Ron, you still need to sit down, have a strategy, a plan, and then I'm guessing then you're just going to need to invest and save a bigger percentage of your income, right?
Yeah. I was on a part of an investment conversation, and they had different ages and how much money you want to have when you retire. Okay. So, for example, if you're age 40 now, and at 65 you'd like to have $100,000 of income coming in, you need to have $260,000 today. At age 40.
At age 40.
And then that will grow. They use a 6.5% return and inflation and this and that. And if you did that, and if you had $260,000 at age 40, you'd have enough to have $100,000 of income. If you don't have $260,000, then you need to start going to work, getting there. If you're 50 years of age, you've got to have about $800,000 to accomplish $100,000 of income. So it depends on your lifestyle, how much money you want, but you need to have a plan.
Yeah.
And it's tough.
And a plan is not, and I'll tease, and I know it's funny, but my daughter she's 20 years old, and she says, what I want to do is just figure out how I could make $1 million as quick as possible and come up with an idea and a venture in a business. So I said, well, that's a plan. Yeah. You just got to sit down and plan for that.
and make it, and then it's called execution. You got to execute, which is a big one.
So retirement, plan. Know what you need to save. Are you saving enough? Those are the things. So let's kind of go through the obvious one is, what are your thoughts in general on the 401ks, Ron? I mean, I know some people. I mean, the obvious one is they're great because they offset tax, and then even better if an employee is matching.
You bet.
So are you again a believer in that process of when you have a job right away, enroll in that?
Absolutely.
Okay.
Because it forces you to just take money off the table. You don't see it in the paycheck. Right. So it's a great way to see that money is being set aside. Over time, it starts growing. But in addition to the 401k, you've got to have your own savings, your own nest egg that you can use for whatever purposes. So when we get closer to retirement, like a lot of our clients, half their money will be in what we call qualified IRA and 401k, and the other half will be in their trust account or their individual joint account. Okay. And you really want to be able to have both, not just a big 401k sitting there with $1 million in there. You need to have it diversified. Right.
So the strategy would be sooner than later to sit down with a person like yourself, really put together a strategy, look at your income, look at what you look ahead, a comprehensive plan, and I will talk about it later back and forth, but is this something, again, that you do for people, and how does that work? Do they come into your office, they sit down for a first-time consultation? How do you do that?
We always do. We always do just a sit-down. There's no charge for that. We do a second opinion as to where you are right now and where you should be.
Okay.
And we can do that, again, just as part of a free service of helping clients. And then if you decide to move forward, we then start doing a lot of work around, okay, what are really your goals? What do you really want to accomplish? And start gathering that. And then we start doing what we call a lot of stress testing. We actually stress test portfolios. So, as your advisor, stressing that portfolio to make sure you're going to have enough money. For example, if we have time, we had a client the other day. They're getting close to retirement.
Okay.
And they said, okay, we want to have $105,000 of income when we retire.
Okay.
So we took their portfolio, we did all the analysis, I came back and said this, and we do what's called a Monte Carlo simulation. It's 10,000 iterations of all this stuff going on. Anyway, it said it had an 83% probability that they would hit that.
Okay.
And we said, that's good. So anything above 75% is a pretty good probability.
Okay.
Yeah. So we said, well, now let's stress test this thing. So we looked back in. They've been with us for 20 years. Their return was over 10% per year. And we said, that's a pretty good return.
That is.
Maybe it'll be less. So let's put 6%. We can override it and put 6%. All of a sudden, it went down to 0.
No kidding.
It wasn't going to make it. It was going to run out of money. So we said, okay, well, in that case, at 6%, what do we have to do? Well, we had to reduce the income from 105 down to 90,000. Then it shot back up to an 84%. So that's part of stress testing, how you say, okay, because you can make adjustments now. The decision was he was going to work for 2 more years.
So talk about that a little bit more. Would a financial planner, advisor, would anybody that's been doing this for a while, if a client or someone new walked into their office, if they asked he or she, can I do a stress test, should they know about what they're talking about?
Yeah, most of them have software programs where they can come back in and do a financial plan and then do a stress test on different options, different outcomes. You can change rates of return, inflation rates, etc.
Okay. And we have a little less than 2 minutes for the first break. And what about the you hear a lot about the Roth IRAs now. I know those are regulated in terms of income, right? But you're hearing a lot of employers are offering that as far as the 401k programs too. Would you encourage those at all possible, whenever possible, the Roth IRA?
If you qualify your income-wise to put money in a Roth, that's great. You're going to pay tax on it now. But the nice thing about it is that when you start pulling money out way down the road, it's all tax-free.
Right.
So the gain is all tax-free on that, which is a huge benefit. And we might as well take advantage of it until Congress changes.
Maybe it's not a fair question, but if you had a choice, what do you think is the best? To pay all your taxes now and let it grow, whatever you're doing, let it grow tax-free, or get your tax benefits now and then worry about it later? That's probably a crazy question.
Do a little of both, because a lot of times you don't qualify. There's phase-outs for the Roth there. So if you're younger, do the Roth.
Okay.
If you're in your 20s, just do the Roth. Pay the tax. You're typically in a lower tax bracket. You're not in the 39% tax bracket. So, put it in the Roth.
Yeah.
And let it grow. We have an advisor in our office. He says every young person should have a Roth, and just put it in there, pay the tax, let it grow, and then you can pull it out tax-free.
All right, we're going to take our first break. We'll come back again. If you'd like a book, Ron is giving away a book free, The Wealth Solution, or if you'd like the research paper, give us a call, 1-800-516-1220. We'll be back with you in just a couple minutes.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Cucchaira.
Welcome back in. Thank you again for joining me this afternoon. Joe Cucchaira with Real Estate Radio Live. We have our guest in the studio for the entire hour, Mr. Ron Howard. He is the managing principal with Siena Wealth Management. Ron's on the show, been on the show on and off for the last couple of years, but we're going to have him on more regularly. It's been a while. He's always gracious with his time and information. So during the show, again, Ron is kind enough to be giving away a book that he wrote the forward on, The Wealth Solution, Bringing Structure to Your Financial Life. Along with that, a separate document, which is a research paper, and that is a working together really document that helps you build, design, build, and protect. 2 separate things. If you'd like these items, no charge at all. Ron is kind enough to give those away. He is passionate about helping people build wealth for retirement and for lifestyle change. So give us a call, 1-800-516-1220, if you have any questions for Ron, or if you'd like to book without any questions, you could still give us a call, or you could text 408-838-9060. Ron, let's talk a little bit about downturns. You're here at a good time. Stock market's at, is it all-time high again?
No,
not quite.
A few weeks back it was. It broke records.
But I remember the last time you were here, we had the, just ironically, it was the big dip or correction in the market, right?
Yeah, it was. You say, hey, what's going on? The first question, what's going on,
Did
Ron?
you bring this with you?
Yeah.
So how should people prepare? Because it does get stressful, I know, and I'm guessing more so people when they're older.
Yeah.
Because, you know, if someone's in their late 50s or 60s and all of a sudden they see 40 or 50% wiped out of there, I mean, that would be scary.
Yeah.
How does a person protect against that, and what is your philosophy and strategy around those thoughts?
So it goes back to planning again, which is building. You got to build a proper portfolio for you. So you're going to have cash in there. You're going to have fixed income, which will be bonds, and you'll have equity, which will be stocks. And again, when we talk about stress testing for your own retirement plan, you can also stress test portfolios.
Okay.
So one of the things you want to do is, do you want to have 30% fixed income? Do you want 40% fixed income? Do you want 50% fixed income or bonds? That's going to dampen the downturn or that volatility in the marketplace. Okay. So you need to kind of feel comfortable. We spend a lot of time trying to identify the comfort level of clients. In other words, can you handle a 20% downturn in the market and still stay invested? Okay. If you can't, then you got to go back in and go more fixed income. So it's this trade-off between stability of fixed income and growth, which is the stocks. If you want growth, you have to take a little bit of volatility. It's called risk and return, and they're joined at the hip. If you're going to take a little more risk, you get a little more return, but you get more volatility. So I use the example to some of our clients. It's like me trying to customize a beautiful pair of Italian shoes. If I spend $5,000 for these beautiful red Italian shoes for the young lady here, and she looks at them, they're beautiful, she starts wearing them, and they give her blisters, guess what? They don't get worn. At some point in time, they're given to Goodwill.
Good point.
So the portfolio is the same way. It's trying to identify the personality, what they're willing to take care, risk-wise, and then make it fit. And you can always have to tweak it and adjust it. But that's the big thing on preparing for downturns. And then identifying that, hey, you're going to have downturns. And if you go back enough research, whether you go back to 1972 or you go back even further than that, you'll see the market graph charts up and down, and you got to be able to weather the storm. And once you decide the right proper allocation. But you can always make adjustments. You just don't want to make a lot of radical adjustments when the market's down. That means you're buying high and selling low. You don't want to. You want to buy low and sell high. So
actually, I learned this a long time ago. I remember the first couple. You really, when you're in it for the long term and you understand that there is adjustments and there will be adjustments, it's a matter of when and where. A lot of people will get excited when the markets go down because it's a buying opportunity, right?
It is.
You could look at it. You could get upset, and I get it. I'm not judging. I mean, there are different people at different times of their life that would affect them. I get that. But I think a lot of people would say that in this for the long run, they understand it. They tend to get a little excited. Same thing with real estate. When we have these big downturns, there's meltdowns, but then there are a segment of people that plan for it, and they go, here we go.
Yeah, you brought some vivid memories. 2008, 2009.
Too vivid.
We had 30 and 40% markets. The portfolio's downturn. I had clients come in. Ron, this is my life savings. We're down 35%. What are you going to do? And so obviously we would go through their portfolio and their allocation, and then I'd say, I said, if you look at it from a perspective of time, this is a great buying opportunity. Yeah. And they would look at me. Are you nuts? I mean, I just lost 30% of it, and you're telling me it's a great. I said, in your lifetime, there will never be a better buying opportunity.
That's great.
And that was true. I mean, 2008, 2009, especially first part of 2009, was a tremendous buying opportunity. If you had, cash that you come back in and buy. Yeah. So you're right. It is a great buying. And so what it does, it kind of creates a checkpoint there that people say, okay, well, I'm not going to sell right now, but if I had more money, I'm not sure I'd invest more, but it was a great buying opportunity.
All right, we're going to take another break, and we're going to come back. But before we do that, again, as we close out of this segment, I'll remind those that would like a free copy of the book here Ron wrote a forward on, The Wealth Solution. Give us a call, 1-800-516-1220, or maybe you'd like the research paper. That's a good one, too, or both of them, 1-800-516-1220, or you could text 408-838-9060. We'll be back with you in just a couple minutes.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Cucchaira.
Welcome back in. Thank you again for joining us this afternoon. Joe Cucchaira with Real Estate Radio Live. We're joined in studio by Ron Howard. He is the managing principal with Siena Wealth Management. We're talking about today the topic, are you ready or preparing, I should say, financially for retirement? And it is big. It's true. You hear it all the time. It probably gets worn out at times, but it's so true. If you don't prepare and you don't plan, you're likely to fail financially. And I see it all the time, Ron. We don't have to look around too far. My own family members, friends I know. I mean, I don't know the intimate details of some, but I know enough to know that they're my age in their 50s and don't really have much at all. And I worry about people. I mean, I worry, especially they're close to me and I care about. I mean, I worry because of the reasons. I just think people don't understand how important it is, and you can't rely on Social Security. Or if it's there, I look at it personally as if it's there, then that's great. If it's not, then I can't plan on it. But it's sad, really. And this is why you do what you do, and this is why people that are passionate about this, to try to get people to understand as early as possible to save and invest and plan.
And kids.
Yes.
Kids. I have clients come in, high school kids, and we give them a little pamphlet called The Richest Man in Babylon.
Great book. Great book.
I mean, this is 100 years old.
It is.
But, I mean, it's
still
a great little story.
Yeah.
And it just talks about setting aside 10%.
Yeah.
And put it to work. And if you do that consistently at an early age, you start having discipline and setting that money aside. You don't miss it, and all of a sudden it accumulates over time, and then you have a bigger nest egg.
Yeah. Do you encourage your clients to bring the kids in?
I do. We have family meetings, and we try to educate the children, and we're doing that all the time. So that's part of that intergenerational work that we do with clients. And
that's good.
But and I find that if you as a parent will do it, the kids will pick up.
Yeah.
If you don't do it as a parent, they won't tend to do that.
That's true.
So there's a little bit about the DNA, about apples falling from the tree, in terms of being able to be frugal enough to be able to save. That
is very true. All right, before we jump to our next topic here, again, Ron is giving away a book that he wrote the forward in. If you'd like the book, it is free today. He's always generous to do that when he comes on the show, as well as along with a research paper that I believe you're going to want to take a look at as well. 1-800-516-1220 if you'd like a copy of each or either, or you could text 408-838-9060. Just a couple minutes left in this segment, Ron. Let's jump into the long-term care. That's a hefty topic, I know, but kind of quickly, if you could summarize how important that is, and what are some of the things you think people should be doing to prepare for that?
Well, that's another big expense for retirement is long-term care. So at some point in time, are you going to have your kids take care of you? Are you going to have the state take care of you? Are you going to have professional people take care of you, assisted care or long-term living? We're doing a seminar tomorrow and talking about those issues. And again, it's about planning. It's about having a health care directive, and it's about, okay, how am I going to fund this? Is it going to come out of my kids' inheritance? Is it going to come out of my portfolio? Is it going to come out of this? So you need to have a plan. Yeah. It's a big expense, especially here in the Bay Area. And we're talking about $10,000 a month.
Yeah, it's expensive. I have some friends, I have some friends and family members that are going through that right now, and the numbers are staggering. I mean, you talk about an opportunity for business. If anybody wants to look at a potential business, going to taking care of elder care or taking care of people when they have their needs. I mean, it is amazing how expensive that could be. I don't
know if we have time in this segment, but I met with an estate planning attorney the other day, and he was saying that for his mom, he had a financial advisor stress test the portfolio and said, okay, at 65 they're going to be the kids will help out. At 75 she'll have assisted, and at 95 she'll be in long term. He said, well, forget about that. Come back and put the long-term full care at 65 and see what happens to the portfolio. So it's a great way, again, to stress test, the bigger expenses up front. Now, it may not happen, but that's how you kind of take a look at a worst-case scenario. But build in the cost of what it's going to take care of you as you live your life.
Well said. All right, we're going to take another quick break. We'll come back. Again, if you'd like a copy of the book, 1-800-516-1220 or the research paper, either one, text 408-838-9060. We'll be back in just a couple of minutes.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Cucchaira.
Welcome back in. Thank you again for joining us this afternoon. Joe Cucchaira with Real Estate Radio Live. We're with you 5 days a week, Monday through Friday. Today our guest, Ron Howard, is in studio, managing principal with Siena Wealth Management, here on a regular basis. Always a great educator and facilitator of how to plan and build wealth for the future. If you'd like a copy of the foreword he wrote on the book, give us a call, 1-800-516-1220. Also, some great research he's giving away. I would encourage anyone that is interested at all, and I would think everybody should be interested. I sound like a school teacher now. Everybody should be interested in this topic, building wealth and saving and planning for the future. 1-800-516-1220 if you'd like a copy of the book, or if you have a question for Ron, or you could text 408-838-9060. We always run out of time because there's so much to cover here, Ron, but in this segment, let's talk a little bit about strategies, market strategies. How do you know, is this, again, finding out who the best match is for a planner, advisor, someone you want to really sit down and plan with? Or obviously someone could do this on their own, which I can't imagine unless they're doing it full time. But how do you know what to buy and invest in?
Well, that's the big $64,000 question.
Yeah.
What do you buy today?
Right.
What do you invest in? And so each of us kind of have a philosophy in terms of your approach. Are you going to buy one stock, two stocks, 10 stocks? Or are you going to go on the other end of the spectrum and diversify? And you heard a lot of debate back and forth. Do you pick stocks, or do you just come in and diversify and buy a broad index fund? So I think you really need to kind of spend some time, because there are different advisors that want to pick and choose and time markets. And that's a strategy. It's a philosophy. We're kind of in the camp of taking as much research as you can. There's some great thinkers. There's some guys that got Nobel Prizes that have done research on financial portfolios, on how best to invest. And we like to look at those guys and do some of their research and then diversify broadly. We think that diversifying broadly reduces some of that risk for the long term.
Okay.
That may not answer your question as to what to buy and invest in, but our approach has really been a broad, diversified basket of securities around the world. So U.S., international, emerging market, and have that diversification that you hear so often about. They now call it modern portfolio theory, even though it goes back to the 50s and 60s and got the Nobel Prize in 1990. But it's a philosophy, and you need to find someone that matches your philosophy.
We've known each other a long time. I've worked with a lot of your clients on the mortgage side, helping them. And you guys have had a lot of success, you and your firm, over the years. What do you attribute that to? I mean, it's easy to say, well, it's easy, I think, when people just check off, we've been around a long time. But in your business, it's more than that. My guess is, knowing you, it's relationships, obviously producing results for people. But what would you say the formula is, why you guys have been so successful over the years? Well,
one is, as we talked about, is do the planning and make sure the shoe fits properly, make sure you get the right allocation. Right. And then it's coming back in and stress test, if you will, those allocations, those portfolios, to make sure that, in fact, we have the best funds or the best strategies in place. And then it's about communicating that to clients. So we meet regularly with clients. It's usually about their goals. Are we meeting their goals? So the idea is not necessarily to have a specific rate of return, but are we achieving their financial goals? There's a goal they want to have of, say, $3 million or $10 million at retirement. Are we on track for that? And then we then come back in and then spend a little bit of time on education. So part of it is educating clients. And so, for example, there's a big debate, growth stocks versus value stocks. So, for the last 10 years, growth stocks have won. We're kind of a value shop. We like the value stocks. And so we go back to 1928, and we show that value stocks outperform growth stocks by about over 3% a year, but not every year, and not every 5 years, and not every 10 years. So it's about research. So if you can have that information that really kind of solidifies your recommendation, that helps clients kind of go through the long term, and it goes through the ups and downs of the markets. Yeah. So you've got to be able to have that tenacity. You got to have that ability to weather the difficult times. In fact, we did a newsletter, and the newsletter part, I said it takes heart and some courage, both to ride mountain bikes, but also to weather the stock market. It takes heart and some courage to go in.
What is the are the clients expected to adapt and buy off on your philosophy and your approach to investing, or does someone come in potentially and say, this is what I'd like to do, can you help me plan that way? Does that make sense?
Yeah, it does. So we have the initial conversation about, is there a fit? Okay. So there's a fit both ways. So a client is expecting certain things that the advisor can do for them, and then vice versa if you're an established advisor. So if a client comes in, or a potential prospect comes in and says, I want you guys to trade stocks, and I want you to be trading 3 or 4 times a day, it's not going to fit for it. But they can find somebody that can do that. Right. So again, matches their philosophy and what they expect out of the relationship. So we would try to show them that that's not the most prudent way to build long-term wealth. It's a strategy. You may be successful at it. There have been a few that have, not many. If you look at wealth managers or investment managers around the country, there's a few that, Warren Buffett sticks out, and Peter Lynch for his ride back at Magellan. But if you look at money managers, they have a hard time. So you look at more of the proponents of evidence and research, and you kind of see this idea of just diversification, broad diversification, not taking risks, minimizing some of your risks, and building a diversified portfolio makes the biggest sense. But again, you got to match. Yeah. So if it doesn't match, then you say, hey, here's a recommendation.
We got to take a break in a minute, and I'll ask you, and if we don't get to finish, we could do on the other side. The whole debate or conversation about investing domestically versus internationally, you and I have talked about that before. Is that also something that I'm guessing that's up to you guys to keep an eye on what's going on and make recommendations to the clients? But what I'll do is I'll ask him. When we come back, I'll have you answer that question because we're running out of time here, and we'll finish up. All right, we're going to take our last break, and this is your last chance to give us a call, 1-800-516-1220. If you'd like a book or research material, give us a call or text 408-838-9060.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Cucchaira.
Welcome back in. Joe Cucchaira with Real Estate Radio Live. As we wind down the show, just a couple minutes left. Our guest, Ron Howard, Managing Principal with Siena Wealth Management. We're talking about Are you ready, the question is, or preparing financially for retirement? It's been a great show. We will have Ron back again soon, I hope. But we exited the last segment, Ron, briefly. This is a short segment we got to cut out. But a little bit philosophies about international versus domestic. You know, you get some people that automatically that aren't, I wouldn't say, it's not educated's the right word, maybe just not aware of what's going on in the financial market. So they might say, you know what, I don't want any of my money overseas. You know, I'm an American person. I'm going to stand there with the flag, blah, blah. I'm not saying blah, blah negatively. Right. That could be a good thing to them, but there's a lot of opportunities if you don't seek elsewhere outside of the, or if you don't go outside the United States, isn't there?
There is. So one of the things we look at is that the research comes back is the more diversification you are, the better you are. And part of that reason is this little concept called dissimilar price movement. What that means is, if you go back historically, there are times when the U.S. does really well, international lags. There's time when the U.S. doesn't do very well, international shines. Okay. So it's a great way to diversify your portfolio by having more than just U.S. stocks there. We call that a home bias. If we're going to buy just U.S. and wave the American flag, that's what we call a home bias. And every country has a home bias. But if you look big picture, there's opportunities all around the world. In that little research paper, Design, Build, Protect, it shows you in 2015 who were the top countries around the world performance-wise for their stock market. And you'll see the U.S. was number 11, and first was the Philippines. Who would have guessed the Philippines? Now, that's just for a one-year time frame. That's not over a long period of time, but it changes all the time. And there are opportunities around the world that you can build into your portfolio on a very conservative basis. And we like that concept about dissimilar price movement, reducing some of the volatility of just having strictly a U.S. portfolio. If someone said to me, though, I've got a big chunk of my money internationally, I work for an international company in my 401k, then we could actually build the portfolio just for the U.S. So we have flexibility around that, but you do want to have some international in your portfolio.
Yeah, and I guess the danger is, too, a lot of people will do this. They'll look at... they'll look at this, maybe a mutual fund or something, and they'll go, oh, my God, look at the return they got in the last 12 months. But they may not realize is what they're going into in the next 12 months, right? You got to be so careful with that.
Yeah, you got to look at longer periods of time. Yeah. So when you start looking at, 1 year, 2 years, it's noise. Yeah. You got to really look at 10 years to kind of get some historical perspective of the performance. If it hasn't done well for 10 years, then, you need to kind of look at the reason why you want to have that. Otherwise, the longer the period of time you have, the better information you have. Yeah.
All right. Well, we're going to duck out in a couple minutes, so I want to remind those again with a couple minutes left. And also, if you're listening to this via podcast, I failed to mention this from time to time, you could always contact us at 408-838-9060. And again, if you're listening to this via podcast, when we have things during the show we're giving away, also feel free to email us or call us, and we can make sure we can get those books and information to you. It's not just specifically for the people that the live show. We want to get this information out to all those that listen to the show for sure. Again, 408-838-9060. And before we go, Ron, if someone wants more information about you or maybe sit down for a consultation, what's the best place to reach you?
Our phone number is 408-244-3800. Our website is www.siena, Siena, wealth.com.
Very good. Unfortunately, we got to go. Ron, thanks for your time. Great show.
Thank you, Joe.
It's Joe Cucchaira with Real Estate Radio Live. Thanks for tuning in. Thanks for participating today. Have a great afternoon. We'll be back with you tomorrow.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Tune in, log in, download our podcast. Discover more at RERadiolive.com. RERadiolive.com.